Hey everybody, Scott Dill from Texas Home Loans. Are you a first-time home buyer looking to understand the concept of down payments with home loans? You hear all of these things. You hear no down payments. You hear you need 20% down. There's all of these items out there. There's a lot of financial folklore out there. We're here to break it down and give you the realistic scenarios, none of this marketing stuff, as to what's available. We have access to almost every loan in the market, and we can tell you what you can get and what's the best thing for you. So down payment, let's figure that out first. A down payment is the upfront payment made towards the purchase of a home. So what that does is that decreases the balance of the loan. The more you put down, the lower the balance on your mortgage. So if you have a $500,000 loan, you put $100,000 down, you're going to owe $400,000. If you put $200,000 down, you owe $300,000. So those are the kinds of things where you can figure it out in your head what you want to do. Now, the size of your down payment can affect your interest rate and the type of loan you qualify for. So, for example, you can get a 5% down, you can get a 3% down conventional, you can get a 3.5% down FHA. There's strengths and weaknesses with each of those. You can do 5%, 10%, 15%, 20%, 30%. You can put as much down as you want. So, that being said, you want to know what you qualify for. Well, depending on the area, you can get some down payment assistance. Most of the down payment assistance programs are for lower income. They're less than 80% of the average mean income in the area where you're buying. With the house prices these days, most of the time, if you have below that income threshold, you don't have enough income to buy the house in that area. The house prices are too high compared to the income. There's been a discrepancy here. You've seen house prices go way up and they have not come down to where they need to be. These low interest rates for all those years over COVID really messed up the market, and you're paying the price. Well, I'm paying the price. We all are. So that being said, this is a good marketing thing. People throw that out and say, oh, look, we're helping these borrowers. They leave out a very qualifying data point, which is a deal breaker, which is if you have this low income to qualify for the down payment assistance, you can't afford to buy the house in that area. So I view it as a bait and switch. There's a lot of these politicians and these big banks, oh, look what we're doing. And when I break it down for the customers, people go, knew it. They were just lying again. Yes, they were lying again. I can show you exactly how they were lying. They're lying by omission. So this is a problem for me because I'm constantly trying to get the truth out to the customers. And then I'm the bearer of bad news, right? They say, well, I thought I'd get a zero down. And I said, well, unfortunately, the people that made these programs, they understood what I'm telling you. They want to look good on a soundbite. They want to look good on a news clip. They want to look good on the in a internet article for clickbait. But they don't want to be good, and this bothers me. So the market still will determine what you can get. The good news is, if you got really good FICO scores and you're a first-time home buyer, you can get extremely low mortgage insurance on your home with high FICO scores because it's risk-based insurance. High FICO scores means low incidence of default. So for example, how low? You can put as little as, I just did a loan, $520,000 loan, purchase price, 5% down, so they borrowed just under $500. They had a 780 FICO score, so very top, and they were paying $67 per month for mortgage insurance. Now you'd think that doesn't sound right because I go on the online calculator, it says $200, $250. Why do you pay so much less for mortgage insurance? I'm going to go into this in my next video. It's a profit center for lenders. I'm the owner of the company. I don't use it as a profit center, so you get lower mortgage insurance. So if you want to do a low down payment, you got high FICO scores, you're going to be rewarded. I hope that helps demystify down payments with first-time home buyers. Give us a call. We can run it through. We don't have to see your hard credit pull to tell you what we can do for you. You're going to be pleasantly surprised at our rates just because we've got low overhead and we're streamlined. Hope you have a good day. Give us a call, Texas Home Loans. Anytime, email, text, we're going to call you back.